Welcome back to the Forex Lounge Fundamental Extras. Today is Thursday, November 4th, 2010. Welcome back, one and all. Great you could join us. Two big pieces of news we read on Bloomberg.com today. The Bank of England kept its emergency stimulus program unchanged as the strength of the UK recovery persuaded officials not to join the Federal Reserve in buying more government bonds. The 9-member Monetary Policy Committee, led by Governor Mervyn King, held its bond purchase plan at £200 billion, as forecast by 38 of 40 economists in a Bloomberg News survey. The others predicted an increase, and economists in another poll anticipated more stimulus in 2011. The bank also kept its interest rate at a record low of 0.5%. In more news, European Central Bank President Jean-Claude Trichet signaled no immediate willingness to depart from the ECB's exit strategy after the Federal Reserve's decision to buy more government bonds sent the euro to a 10-month high. Quote, "The non-standard measures are by definition temporary in nature," Trichet said at a press conference in Frankfurt today as the ECB left the benchmark interest rate at a record low of 1%. "The Council has to make up our mind and we will see what we will do next month. The rendezvous is for December." So the Bank of England and European Central Bank both leave rates unchanged as expected. 0.5% on the Bank of England, which you can see is the dark blue line. It's historical interest rates matching up with the 12-month moving average. We now compare the Bank of England historical rates to the FTSE, that's the stock average in the UK. Generally speaking, during prosperous times, when stocks rise, we also see the Bank of England raise rates. When the Bank of England cuts rates, this usually goes along with falling stock prices. Also compare the Bank of England historical rates to the pound-dollar currency pair. Now, of course, there's two currencies in a pair. However, generally speaking, as we anticipate the Bank of England will raise rates, we tend to see stronger prices in the pound. If we expect the Bank of England to cut rates, we see weaker prices in the pound. Now, compare that to the European Central Bank, which also left rates unchanged as expected today at 1%, matching up with its own 12-month moving average. Compare the ECB historical rates to the green line, that's the CAC in France, the violet line, that's the DAX in Germany. Prosperous times, we tend to see the European Central Bank raise rates and stronger stock prices. Conversely, as the economy turns to the downside, we see European Central Bank cut rates. We also see stock prices decline. We can also compare European Central Bank historical rates to the euro-dollar currency pair. Generally speaking, as European Central Bank raises rates, we tend to see stronger euro prices. As they cut rates, we tend to see weaker prices, although we do not have, obviously, the extensive history in the euro rates as we do in the UK and other nations. But to recap, European Central Bank and Bank of England both leave rates unchanged today as expected by most economists. We hope this has been helpful. If you have any questions, email us anytime. info@forexlounge.com. We thank you for joining us. We wish you a great day, all profitable trades, and we look forward to seeing you back soon. Back inside the Forex Lounge.